Hey traders, this is Christian from Tribeca Trade Group, and this is your end of day and end of week recap for Friday, July 19th. So options expiration today, a little bit of everything today, right? We had earnings that came out from a couple big companies, or from a couple momentum companies, I should say, too, and then you have this Iran situation, which was the exact opposite of yesterday, and you also had the Fed, speakers dialing back what they said yesterday. About John Williams did a little bit of an oops yesterday. He's president of the New York Bank, right, for the Fed. So, he kind of slipped yesterday and said that we could possibly go 50 basis points. Well, later a Fed spokesman came out and said that was purely academic, whatever that means. I guess they really didn't want him to say that. So they kind of dialed it back and said, hey, we're probably going to do 25 basis points. So so knee-jerk reactions. So let's talk about that for just a couple minutes, and then we'll talk about the price action for today. But why is that notable or significant? Well, unfortunately, that's kind of what how the market is really responding right now. It's to whether or not the Fed is going to be, how accommodative they're going to be, what they're going to cut for interest rates, right? So what I have up here is Fed Fund futures. I've been sending this out, and probably some people have no idea what I'm talking about, but you could actually pull this up in Fed Fund futures. So you could actually pull up the two different contracts, and if you do the difference of the contracts, you could basically see what Fed Fund futures are pricing in terms of what the market is pricing in for the July Fed meeting, which is, by the way, the end of the month, July 31st. So this is what we. So again, this is, if you look at up here, there was no cut expected. This was back in May, and then all of a sudden things started to move. Once we got into May. And then we really moved, the market started to price in 25 basis points, and you can see that kind of in here. It went from 20 basis points. I don't remember what this day was. Maybe that was a Fed meeting. And we actually went to 30 basis points. So then yesterday, right, this was the move yesterday, which basically jumped like crazy once Fed Williams talked about 50 basis points, right? So this moved, right? So Fed Fund futures, if you look at the right column, it went from about 34 basis points to about 40 basis points, right? So why am I going over this, and why am I spending so much time on this? Because the market really moved. Things like gold and silver at this time went nuts at 2 o'clock yesterday. And then we started to see, and then equities too are moving this to a little bit of a lesser extent, right, on that move, right? So again, that was right at around where those statements were made, were right around in the afternoon, but around 2 o'clock yesterday. And today we had the opposite move as the Fed released a statement saying that they're probably not going to do that, and that was a little bit ahead of itself. But so we got the opposite kind of move. This is the market taking off on that. This is gold, right? Gold made this huge move yesterday. Gold miners even more, and we kind of retraced some of that move. And I think what you have is an inside day for gold, but that's really kicking things around. And then the second thing was, which was just as notable today, if not more, is that there's the Iran tensions are escalating as they seize not one but two British shipping vessels, which I don't know the extent of. I don't know how big the boats are and so forth. But of course, it was a catalyst for the market today. So really odd that the opposite of yesterday transpired. So how did I kind of, these are just obviously things that we cannot control. What you can control is your risk and how you're trading, whether or not you're taking some trades off the taking some profits off the table, and moving a little bit more into cash. That's what I've been basically doing all week long. So not just I thought yesterday was a gift. So here's my blotter, and this has been going on all week for me. Now I have been adding a few trades here and there, but I'll go over the day's price action. But since last week, I've been a net seller. Of some things. I was forced out of too. Not everything is a winner. Some trades were great, some were mediocre, some were smaller profits. But the bottom line is I want to move more into cash. So I'll go over the technicals in a minute, but I'll go over just a few points besides those what should I call them? Exterior type of forces that are causing the market to kind of whipsaw around like that, like the Fed. I don't, of course, if I had to choose, I really don't like, and I think for the most part, as I'm kind of sending some of these things out, I get feedback on Twitter, and I think the feedback that I get are people are really getting tired of having to hear from the Fed every day. I think for a while, the trade war has been going on for well over a year now. I think everybody's kind of tired of that, and whether who and what has a conversation again for a trade deal, and if it's constructive. I mean, I think everybody's a bit tired of that, but yeah, I mean, there's unfortunately with trading and investing, there's always going to be distractions on the tape. That's just the world that we live in. So let's talk. I'll talk a little bit more about earnings in just a second. I want to go over Microsoft, but here's the price action. Please don't take this too negatively because it's just one day, and I want to just circle back to my view for the market. But even gold. So why did gold and silver go down with equities? And that was the first thing that we went over in this video is because of these things are going to move together when the Fed talks about accommodating versus not so much, right? So you've got so where did SPY finish for the day? Down just a 0.5%. So this again is not that bad, but when you look at the range, it's a bit bigger than that, right? So Q's finished down 70 basis points. But from where they started this morning, remember with Microsoft earnings, they started the day higher, as well as some other names that reported. Small caps continue to be a bit of a mystery. They are still kind of hanging around before they break. There's definitely seem to be leaning to the downside, but I don't think have fully broken yet. And then, of course, gold and silver giving back some of those gains based on that Fed speak. What performed well today? Some energy. Defense and aerospace, I think, on Iran. I think also Boeing got a jump, which is a big portion of this ITA, which is separate from that, which I won't go into. The banks, for the most part, were doing pretty well today. They did finish green on the day, so I got pretty wishy-washy tape, and maybe some under-owned areas are seeing a little bit of, little bites of buying right now. Maybe people shifting some things over a little bit. Also, some of the material stocks. At one point, steel was doing very nice today, but I don't even see that on my list. Where's SLX? Unless I'm just missing it. But at one point, steel that's still finished up 1%. There it is, right in front of me. But off the highs pretty decently. And then what's really interesting is software was the worst performer in terms of from where it started on the day, and this is really kind of counterintuitive. But before I go into the software space, the rest of the group, biotech just continues to also kind of fall. The FANG Internets, I mean, you look at the FANG stocks got really beaten up today from the open. I mean, they got all the FANG stocks, with Apple included in there, fell over 1.25% today. So we'll go through a couple of these as well. My second tier, these are not FANG stocks, but you've got Microsoft, PayPal, Square got hammered, Snap got smoked today, like down 3.6%. So things are starting to come a little bit undone, especially in the momentum areas. So I want to talk about let's go and talk about Microsoft. Microsoft finished up 10 basis points, right? So what does this tell me? This tells me when something like this, because as far as I read, I did not listen to the conference call. I will do that this weekend because I always like to listen to that because I think that's most important, is to kind of get a feel and a tone from what management is saying about how they executed last quarter and what their view is on the future. But look at this thing. I so when we set this up in the pre-market session, and what did I say in the pre-market session? I said if Microsoft, comes in, if there's a little bit of profit taking, that's fine. If it manages to close above 138 or 138 and a half, these are the two levels that I mentioned earlier. I really said 138 and a half. Then it's fine. It's a little bit of profit taking, but you know that the trend, like everything is going to look okay after that. But if it gives back all the profits, something just that to me that means that the market is very tired. It can't go up on any more good information. It's very similar when you talk about when the market when something has gotten beaten up to the downside and more bad news comes out and the stock actually rallies, right? So that's actually putting in a bottom for a stock when you see something like this. This is kind of the opposite, right? Really good news out from the company. They're hitting on all cylinders. Perhaps it can't get much better for them right now. Is that's kind of what just, and again, one day is not a trend, but to see this only finish up 15 basis points, it kind of feels like all the good news is baked in. And we could see how this finished for the day. It didn't lose any of the trend, but it's probably going to digest a little bit. Um, so interesting, right? I mean, you could see we also did not get overbought. If we move over, so software, right, which has been the market leader, this has been kind of, you know, same deal here. Notice it did not make a new high. The last high was back on 715, which was not that long ago. Obviously, was what, a week ago? 715, or was that on Monday? But that's where it made a high, and it's been kind of coming in since. So it just tells me that this group is a little bit tired right now. And again, this has been, other than the defensives, which have been market leaders. Names like the utilities and USMV, which is minimum low volatility equities, which, believe it or not, have been some of the leaders of the market. But software has definitely been in this group, and yeah, it looks a little bit tired. So, is this the worst thing in the world that we're seeing this right now? I don't think so. I think we've had such really nice performance over, since basically the beginning of June. We're probably due for a little bit of a move back. We'll see how deep it gets, right? We're going to have a lot of names that report earnings, regardless of anything that I'm saying or anything that I've said here in the last 10 minutes. This is, to me, is always the case that there's very, very choppy action in the market around earnings for 3 weeks. So I generally try to lighten up as much as possible. So again, that's what I did, and that's mainly in option positions. Stock positions, I really try to stick with whenever I get into a position, looking at where the stock could get to. I always have a stop price. So some of those, unfortunately, I take, if it does breach support, I take the stop. But a lot of those, I like to put the stops very, very close for stock positions. Option positions, on the other hand, are going to be more volatile. And if we start to even if we don't go down, if we chop, you're going to lose on your, the option premium. So again, remember, options are really should be used if you're using them for short-term trading. You want to capture fast and aggressive moves. If the market is moving slow, chopping around, not going your direction, you're going to lose, and you're going to lose fast. So that's the lesson to be learned when you're trading options. And if you think that you're going to have a choppy time in the market, or the market's losing momentum, it's really not the time to swing trade options, in my opinion, right? Of course, this is, me preaching and not giving out advice or recommendations, but just basically talking about how I trade and how I feel. Stocks are another thing. Like, they can withstand the chop. You don't lose anything, maybe time value, like opportunity cost, not actual time, like time value in options. But you're not really losing anything, and you can kind of weather that storm, right? And if you're getting anxious about, the market not going up fast enough or so forth, maybe taking some breaks and, not looking at intraday price action so much helps me a little bit. I, of course, can't do that. I run an all-day trading room, but I understand if people want to take a little bit of breaks. Also, the reason why the other observation when I went over in the midday video, in the midday video, is this: we started to see this trend a few weeks ago where more often than not, stocks are opening on the highs and then giving back a lot of profits. Remember, if you're swing trading, I still try to hammer this point as much as possible. Is that the best time to put on swing trades is end of day, and the best time to in the beginning of the day is not the best time to be adding trades. That is showing up again, I think, more relative than we've seen maybe in the last few weeks. But going back a few weeks ago, that was the story as well. But I think that's just basically how it's done. Is that waiting to the end of the day, you have much more information about how the bar is going to look. So I would keep that in mind. I took one trade today this morning. I thought ISRG was going to run. I actually made some money on a day trade and then converted it to a call spread because there is a nice virgin point of control that's over here. But if it can't get above value, which I'm saying 540, then that trade is most likely not going to trigger and not going to go long. But intraday, it gave me a little bit of a fool. But again, that's exactly why I never really put on a big position in the beginning of the day. Kind of look to scale in. And what I said was, hey, if this does what I want it to and closes above 540, even around 543, 544, it's a good sign and I'll add to it. But unfortunately, that did not happen. So that's ISRG. One name. I wanted to talk about Netflix a little bit. Netflix closed at 315. So if you are bullish, I would say be very careful. We've broken this range decisively. I think this is setting up for a short. I've got a couple different things that we went over in the room. If you're okay with shorting, I know some of you may not want to hear that, but I think it's good to go over just so that you have some levels. So if I turn this on our market webs, we could see some downside. But I think the next area is 305, call it 306, could be the next area that Netflix falls to. If you really want to play for a bigger move, possibly, it could actually fall to 254 on the weekly chart. But first things first, I would look for that one move, that level that I just mentioned on the daily chart, which is about 306. So keep in mind, this stock has been in a range for months and months, right? All the way since back February. The stock has not been a market leader. It has been moving in a range since February when everything else has been going up. So this has actually been a big underperformer of the market, relatively speaking, and I think it could fall further at this point. So that's my opinion there. What else? So for next week, I think you want to get your popcorn and kind of watch things and take note of what stocks close on their highs after earnings, what stocks did what Microsoft did, which again is pretty confusing, right? But this is how the market works. Sometimes just positive information and a good earnings report doesn't lift the stock anymore, and that usually tells me that the stock is kind of tired or exhausted. All right, guys. So that is that. I wouldn't worry too much about the overall market. I think that we've been on a really nice run, and I think that from time to time we need to shake the weak hands out of the market. Right? The market does this from time to time, and we really haven't had a decent pullback. And again, we haven't in the S&P. We have not even broken support. Right, so that's 29.64. That's going to be the level to watch for next week. The other thing with this Iran stuff. So I want to end on a positive note here because I'm not like getting majorly bearish or anything like that. Just kind of in a little bit of a wait and see. Let's shake some of the weak hands out of the market And then we'll kind of regroup, and maybe we do that after earnings. Remember, all those company buyback plans are for the most part are off, or a majority of them. Some can actually trade in them if they set up a 10b5-1 plan, but that's a whole nother conversation. But there's a lot of buyback plans, company buyback plans that are off right now. So be patient with this market. Let it do what it wants to. And I would say these international conflicts, while scary and the headlines are scary, the international conflicts usually end up being buying opportunities. Of course, there's a knee-jerk reaction when you see things like, that we could be getting involved with Iran in some aspect, that they're seizing boats. But usually, that ends up being a buying opportunity, but just may not be right, in a day or two. Sometimes it takes a little bit longer than that. And, remember, if that conflict does escalate, you have to remember some companies are completely unaffected, right, by that. So that's kind of where we'll be turning to next week. All right, guys, have a great weekend and great trading this week. And I'll see you guys next week.